How does the IRS take on cryptocurrency? Or, as the IRS calls it, virtual currency. What do they mean by virtual currency? Why do they tax it as they do? Do they tax it? Some people would argue they don't. Some people would argue that they shouldn't. Who knows? Whatever the case is, we're going to go over Q&A involving cryptocurrency, or again, as the IRS calls it, virtual currency. My name is Kenner French, and with vastsolutionsgroup.com, we're doing this on behalf of Vast Voice, the media arm of vastsolutionsgroup.com. Let's just jump right into it. What is virtual currency, as they call it at the IRS? Virtual currency, it's a digital representation of value that functions as a medium of exchange. What is that? It's a unit of account. It's a mathematical element to a dollar in this case, which is called a virtual dollar. It's a store of value. Best said, it's a store of value. In some environments, it operates like real currency, right? United States or any other country, it's designated as a legal tender. It circulates and is customarily used and accepted as a medium of exchange when it comes to goods, services, or at least sometimes, and it can be construed as legal tender in some states. Now, virtual currency, again, as the IRS calls it, or cryptocurrency, whatever the case is, it has an equivalent value in real currency, or it acts as a substitute for real currency. More and more, it will become a real currency. Quote, real currency, by the way. It's referred to as a convertible virtual currency because you have to move, let's say, Bitcoin to another currency, that being a dollar in the United States. It's one example of a convertible virtual currency. You have to move it from, let's say, Bitcoin to the US dollar if you want to do a transaction, the way it reads in the IRS protocols. Bitcoin can be digitally traded between users and can be purchased for exchange for US dollars. That's when it's really of value. We're going to get in that a little bit more in this Q&A. The following, we're going to go over some questions and answers, and it'll help you understand a little bit more how you as a taxpayer should deal with cryptocurrency. Bitcoin, Ethereum. The whole list goes on. How is virtual currency treated for federal tax purposes? This is important. I was just talking to a big name consultant today who actually became a client. Otherwise, I'd be able to say her name. For federal tax purposes, virtual currency, it's treated as property. So it's the same thing as you owning land. Let's say you own, $50,000 of land. You basically own $50,000 of cryptocurrency. That's the way it reads in the United States tax code. It's crazy, but that is the case. Land equals cryptocurrency. Cryptocurrency equals land. General tax principles applicable to property transactions apply to transactions using, as we speak today, virtual currency. Now the question, is virtual currency treated as currency for purposes of determining whether a transaction results in foreign currency gain or loss under U.S. federal tax law? That's important. More and more, there's going to be international transactions that occur involving cryptocurrency. No. Currently, under applicable law, virtual currency is not treated as a currency that could generate foreign gain or loss for U.S. tax purposes. That's huge, by the way. Must a taxpayer who receives virtual currency as a payment for goods and services include that in gross income, that being the fair market value of that currency at that time? The answer, this is important, ladies and gentlemen, the answer is yes. A taxpayer who receives virtual currency as payment for a good or service must compute that as gross income, including the fair market value of the currency measured in the U.S. dollar at that specific time that the transaction occurred. That's important. Now, what is the basis of virtual currency received as payments for goods or services? The basis of virtual currency that a taxpayer receives as payment for good or services, it's the fair market value of the currency at that time. That's really, really important because a lot of people forget that. You have to track the time, sometimes even the specific time, and not only the date, believe it or not. How is fair market value of virtual currency determined? This is where we get a little murky now. For U.S. tax purposes, transactions using virtual currency must be reported in U.S. dollars. And believe me, there is a part on the on your tax filings every year where it asks if you are holding or have held any virtual currency throughout the year. That's important. Therefore, taxpayers will be required to determine the fair market value of the currency in U.S. dollars as of the date of the payment or the receipt. That's so important. You have to go back and look at the value of whatever that cryptocurrency is on that date that you got that. You got that as income, or you got that transaction. If a virtual currency, again crypto, is listed on exchange and the exchange rate is established by market supply or and demand, the fair market value of the virtual currency is determined by converting the virtual currency into U.S. dollars at the exchange rate, at that specific exchange rate, in a reasonable manner, and it's got to be consistently applied. Does a taxpayer have gain or loss upon an exchange of virtual currency for other property? And clearly the answer is yes. If the fair market value of property received in exchange for virtual currency exceeds the taxpayer's adjusted basis of the virtual currency, the taxpayer has I almost said virtual, has taxable gain. The taxpayer has a loss if the fair market value of the property received is less than the adjusted basis of that virtual currency. It's important. If it goes up, if it goes down, it's got to be tracked. What type of gain or loss does a taxpayer realize on the sale of an exchange of a virtual currency? The character of the gain or loss generally depends on whether the virtual currency is a capital asset in the hands of the taxpayer. A taxpayer generally realizes the capital gain or loss on the sale or exchange of the virtual currency that is a capital asset in the hands of the taxpayer. Now, I'll give an example. Stocks, bonds, and other investment property are generally capital assets. A taxpayer generally, therefore, realizes ordinary gain or loss on the sale or exchange of virtual currency that is not a capital asset in the hands of the taxpayer. So, inventory and other property held mainly for sale to customers in a trade or business are examples of property that is not a capital asset, dollars in effect. So now, we get this question a lot. I'm going to go over mining. Does a taxpayer who mines virtual currency, for example, uses their computer resources to validate Bitcoin transactions or maybe even make Bitcoin, do they realize gross income upon receipt of the virtual currency resulting from those activities? The answer is yes. When a taxpayer successfully, quote, mines virtual currency, the fair market value of that virtual currency as of that specific date is construed as gross income. It's includable in their gross income. A lot of people who are mining, we have more and more people who mine, don't realize that. Is an individual who mines virtual currency as a trade or business subject to self-employment tax on the income derived from those activities? Meaning, is it short-term? It should it be included in that year, basically as income for as a part of your business? Now, if you're a taxpayer and you're mining virtual currency, it does constitute a trade or business in the eyes of the IRS. The mining activity is not undertaken by the taxpayer as an employee. The net earnings from self-employment, gross income derived from carrying on a trade or business, less allowable deductions resulting from those activities, constitutes self-employment income and are subject to self-employment tax. All very, very important if you're mining. Really, really important to think about, because sometimes people don't realize that when they're doing their mining activities. I'm going to close with one other question, especially I don't know how many miners are out there, or even people who are doing independent contracting, but does a virtual currency received by an independent contractor for performing services constitute self-employment income? And the answer to that, drum roll please, yes. Generally, self-employment income includes all gross income derived by an individual from any trade or business carried on by the individual other than an employee. So, consequently, the fair market value of a virtual currency received for service performed as an independent contractor measured in U.S. dollars, if you're a U.S. taxpayer, as of the date of receipt, that's what constitutes self-employment income. It's subject to self-employment tax. I used to pay a number of my contractors in Bitcoin, and by the way, I'm sure they're doing very well now as a group. But anyway, they had to report what they were doing, the date they got the money. They had to report it as self-employment income. So anyway, once again, my name is Kenneth French. Hopefully that was helpful. Short little Q&A, maybe a little spicy, a little hard to understand. If you have any questions, please feel free to give us a call. 888-808-8278, extension 700. That gets you into the Vast Holdings group of companies, and or specifically if you want to get a hold of me, please get a hold of me at extension 710. Once again, my name is Kenneth French, vastsolutionsgroup.com. We've gone over some specifics of Q&A as it relates to cryptocurrency. Again, people need to think about cryptocurrency as it relates to, one, not only as an investment, but also the taxation. Few people know and understand the taxation involving cryptocurrencies. It's something worth looking into because sometimes it can cost you a lot of money if you are not paying attention to taxes. And who knows, maybe you can open yourself up to audit, or maybe even worse, maybe you can be construed as doing fraud if you're not paying attention. Once again, Kenneth French, thank you so much for taking the time to listen to this episode, brought to you by vastsolutionsgroup.com.